the U.S. Fed with rate hikes, especially because we see the rest of the world maybe diverting away or some divergence where lowering rates or having quantitative easing while we raise rates. So I think that's the big macro point that we're going to look to next. But I do have to say that I almost believe that stocks are anticipating it now where they weren't a couple of weeks ago, perhaps not prepared. It seems like the stock market almost wants that, especially when you see leadership from the banking sector, which would greatly benefit from a rate hike.
Given that, I mean, it has been well flagged that we are likely to see a rate hike sometime this year, do you think that the initial hike is likely to be really disruptive to stocks, or do you think it has been largely priced in?
You know, a few weeks ago, I would have said yes. I think it's going to be disruptive for stocks, but I don't think they fundamentally were prepared for a rate hike. But I think since then, since its macro issues have cleared with China and with Greece, it seems like now that the market is prepared for that and actually anticipating it. So I don't think rates going higher, at least by 25 basis points, is going to spook the market for that reason alone.
Do you think it's more, say, the second hike or the pace of hikes that comes after the initial liftoff that's going to be more significant?
Yeah, precisely. I mean, I think Yellen continually reiterates that fact, and I'm sure she'll say it again on July 28th, that it's not the rate hike, it's the pace of the hikes that matters so much. So, yeah, I mean, whether it's 25 or 50 or 75 basis points, that does matter, but it's how fast that comes about is what would end up like something that we would have to worry about or be concerned with.
Larry, we do know that the next FOMC meeting is fast approaching. It's coming through at the end of July. Do you think we're likely to get any strong signals at this meeting if they do in fact intend to move in September?
Yes, I think so. I mean, I think that she is going to move a little closer than she has last meeting and the meeting before. She has said that they're intent on raising rates sometime this year. And I do believe it's a great time for her to roll out that red carpet and announce that to the market, just to get the volatility out of the way, especially if the markets are as calm as they are right now.
We saw James Bullard speaking earlier this week. He was saying that he believes that there's more than 50% chance that the Fed will hike in September. What's your view? Do you think we're likely to see a hike in September?
Yeah, I'm higher than 50% as well. The market's pricing it less than 50% right now, about 36, 38% in September and maybe 65% in October, but I still am maintaining a September rate hike.
I wanted to take a look now at equities, Larry. One of the big themes over the last few trading sessions has been quite a notable shift out of those commodity-linked stocks, more into those momentum stocks, continuing to see accumulation in the financial sector as well. Take us through the factors behind this rotation.
Well, look, what we're seeing is a stronger dollar, and we're seeing a stronger dollar because the dollar rates are going higher against other currencies. With the whole idea that we're raising rates where we have other countries on the verge of either lowering rates or having quantitative easing, whether that be Canada or Europe. So that's going to create a cheaper commodity price. And I mean, that's the thing we're seeing right now. No, we're not seeing the same volatility that we saw 6 months ago with this, but we're still seeing that theme rear its head again.
I wanted to take a look at your asset allocation. I mean, low growth has been a bit of a boost to those asset prices over the last 5 years or so, but it looks like this is slowly coming to an end. What's your biggest concern?
My biggest concern is still low productivity around the world. Is something, especially in the U.S., that doesn't seem to get a whole lot of headline. Maybe it's not very interesting to people, but that's something that we've been able to maybe brush under the rug for a long time, given the cheap money, et cetera. And cheap money has done what it was supposed to do. But you have low productivity and productivity that doesn't seem like it's recovering at all. I do think that is troublesome and does warrant some attention, and it definitely has my attention.
Fantastic, Larry. On that note, we will leave it there. Thank you so much for joining us.
You're welcome.